and welcome to my channel. For those of you new, these videos are about my journey towards financial freedom. They will cover financial well-being and financial products so you, like me, can meet your goals sometime in the future. Now let's get into this latest video. Now this latest video is about my ICE review during the month of July 2023. Now it's not to say boast or brag or say look at me, it's to say if I can build a sizable portfolio, so can you. We just need to take some steps, some plans, some action. So let's get into, shall we say, the month of July. So it'll cover our contributions, our dividends, and what sort of shares or holdings we hold within the portfolio. For those of you new, for 2023 we're looking for annual growth of 10%. We're looking for annual dividends of £200 a month, so let's just say £2,400 a year, and a year-end value of £94,000. So we look at the following chart. How have we done during the month? Well, we started the month at £79,062. We finished the month at £81,799. A total profit of £2,737 a month, and year to date our return has been 7.6%. So quite happy, shall we say, with the performance. We've had a good month. It has recovered during July. In July, our platform provider charges monthly admin fees of £12.56, which is about average, because it's based upon a percentage of our portfolio in valuation. We made contributions of £1,014.42, quite sporadic, and the tax year to date £3,076.26, predominantly based in UK, predominantly based, shall we say, within financial services. And look at the following chart. Where is the holdings held? So in the UK and Europe, 64.1%. In America and USA, 22.32%. And in Asia and emerging markets, 13.59%. Now during the month we received one dividend from Sainsbury's the retailer, £77.64, which we reinvested, gave us 27 new shares, which will increase dividends in future. So year to date, our dividends of £1,488.96, so slightly above our expectations, okay, but our shares give an average yield of 4.99%. And what about the portfolio? So let's dive into where our shares are. So we own 9 shares, 6 in profit, 3 in loss. Total share values of £37,297 makes up nearly 46% of our portfolio, of which 39% is in the FTSE 100 and 6% is in the FTSE 250. What sorts of shares do we hold within the portfolio? At the moment we own 9 shares, as I've said. Look at the following graphic where they are. So our largest holding is Legal & General, insurance company, safe, secure, boring, shall we say, does 8% yield. We own 3,860 shares, £9,000, 11% of our portfolio, and hopefully will give very good results and an increased dividend during the next month of August when half-year results are out. Our next holding is Lloyds Banking Group, 16,928 shares, £7,600, 9.3% of our portfolio. Now the banks have struggled lately, but results were out. Pre-tax profits for the half year was up 23%. Annual dividend was increased from 0.8 to 0.92p a share, so up 15%. But more importantly, the profit margins were increased. Our next holding is backed in insurance companies. We own Aviva, 1,264 shares, nearly £6,000, 7% of our portfolio. Again, a very nice yield. Results will be out, shall we say, middle of August, but we did increase our holdings of £1,000 during the month because it is giving a yield of over 8%. Our next holding is away from the financial services. It's Card Factory retailer, £3,200 or 3,208 shares, nearly £3,000, 3.5%, and it has had a very good run lately. Has had a very good trading statement, and momentum's been very good during 2023 after the disaster period for the COVID, but we're in a very nice profit with the holdings, but it is restricted. It cannot pay dividends till 2024 at the earliest. And then back onto the banking sector, we own HSBC, 410 shares, £2,600, 3% of our portfolio. Results will be out at the start of August, hopefully very good results, very good dividends, but it is now paying a quarterly dividend and it is paying a special dividend at the start of 2024. And then back on to, shall we say, the banks also, Barclays, 1,588 shares, £2,500, 3% of our portfolio. Again, very good results, half-year results, and again, the dividend was increased by over 10% and the margins were increased. And then back to our shareholding, we received the dividend due, Sainsbury's. So we now own 871 shares, £2,400, 3% of our portfolio. Everyone needs to eat, everyone needs food, it's very cash rich, and it does have good sales, and it is paying an increased dividend. And then finally, back onto our smallest shareholder within the banking sector, NatWest. 936 shares, £2,300, 2.8% of our portfolio. Again, results were very good, dividends increased, now 5.5p as an interim, and again, the margins were increased. It's got some kind of uncertainty about what's happened with the recent, so it's a chief executive resigning, and obviously under pressure from the government because they still own 39%. Hopefully moving forwards, that amount will be reduced when the shackles are off and the bank's got a greater free roam. And then finally, our smallest shareholding is AJ Bell, the platform provider. 629 shares, £2,000, 2.5% of our portfolio. Very good increase in new customers, very good assets under management, and it has done a lot of new trading platforms to try and get, shall we say, people new to investing. But it is cash rich, it is a growth company, and it does pay a very small dividend. So let's now dive into what sort of funds we have in our portfolio. So at the moment, we've got 12 funds, 6 in profit, 6 in loss, makes up £44,429, 54% of our portfolio. Now I'm not going to go through all funds, but just a collection of the largest holdings. So our largest holding is a passive adventures fund, £17,500, 20.1% of our portfolio. We can just switch off, it's reinvested, very low fees, but it was done for diversification because we were solely originally UK based. Our next holding is a legal and general technology fund, £8,000, nearly 10% of our portfolio, again done for diversification against the big tech stocks in the US. Has had very good results in 2023, somewhat recovered after the disastrous 2022. And then a few selective funds, shall we say. We've got a positive change, an ESG fund, £4,000, 4.7% of our portfolio. We own a US smaller companies, £3,000, nearly 4%. We own a China fund, £2,800, which has struggled recently for what's happened in China, but ultimately a long-term player. We own a mid-cap fund, nearly £2,000, 2% of our portfolio, and we own an emerging markets fund, £1,800, 2% of our portfolio. Other companies we own, shall we say, an AIM fund, we own a UK equity fund. Our smallest holding is a fund in Russia. We did put £500 in, went up to £600 plus, nice profit. Obviously the Russia-Ukraine conflict came and it struggled ever since, but thankfully it makes up 0.28% of our portfolio. Who knows what will happen moving forward, but it's done there, just sitting there, shall we say, not making a profit, not making a loss, in some kind of limbo land. It just goes to show, shall we say, not all funds will, shall we say, be good, but it was originally bought for a specific reason, and we were actually showing profit. And remember, these are my own opinions. I think we've got some good schemes, we've got some bad schemes. We've got, shall we say, some very good funds, we've got some very good results during the month, we've got some very good dividends due September, October this year. But we're quite happy, we're making 7%, our target is 10 for the year to date, and we're above our expectations for our dividends received. Remember, it's not a get rich quick scheme. If you like the videos, smash the like button, subscribe to the channel, and we'll see you again in the next video.